HSBC increases key profitability intention after earnings beat. Shares climb. Singapore HSBC stated a 15% dip in first-half earnings as credit loss provisions rose, but the fall turned into not as awful as feared, and Europe's biggest financial institution lifted its returns guidance within the notion that growing interest prices will increase sales. In a sign of developing confidence in its capability to enhance profitability notwithstanding the worldwide economic uncertainty, HSBC raised its near-term return on tangible fairness purpose to at least 12% from 2023 onwards. The London-headquartered lender stated on Monday a pre-tax profit of $9.2 billion for the 6 months finishing June 30, down from $10.84 billion a year ago, however beating the $8.15 billion average estimate of analysts compiled with the aid of the bank. The bank said it might pay an interim dividend of 9 cents in step with percentage and that it intends to revert to paying quarterly dividends from the start of 2023. It additionally stated proportion buybacks remain not likely this year. We apprehend and admire the significance of dividends to all of our shareholders. We will aim to repair the dividend to pre-COVID-19 stages as soon as viable, Chief Executive Noel Quinn, who has been going for walks HSBC for more than 2 years, said. Hong Kong-listed stocks of HSBC reversed early losses and rose more than 2.5% in afternoon trade on Monday. HSBC said Asia's percentage of profit went up to 69% in the first half from 64% a year ago. The financial institution has come below pressure from its biggest shareholder, Ping An Insurance Group County of China Limited, to discover strategic alternatives along with spinning off its mainstay Asian company to free up extra shareholder value. Since then, the suggestion has won support from a few retail buyers in Hong Kong who were disgruntled with dual-listed HSBC's selection to cancel its dividend payment in 2020. A Hong Kong baby kisser has urged HSBC to spin off its Asia Corporation and rent representatives of Ping An to its board, as the global lender prepares to fulfill with Hong Kong shareholders on Tuesday. The financial institution stated it's far accelerating the restructuring of its U.S. and European businesses, and could depend on its international network to maintain to pressure profits, in an implied rebuttal to Ping An. Stated remaining month the bank could push back on Ping An's proposals. Our energy is a nicely linked, global group is the main reason our wholesale customers pick out to bank with us, and we are decided to capitalize on the advantages our network offers us, Quinn said within the income launch. HSBC pronounced a $1.1 billion price for predicted credit losses, as heightened monetary uncertainty and rising inflation placed greater of its borrowers into problems.